XRP Future Millionaire. It's 8:22 a.m. and we have a lot of stuff to talk about. The Fed raised rates yesterday by 50 basis points, which I said I thought they would for a minimum. They're so far behind, but it was the biggest single interest rate hike since 2000. So I want you guys to listen to this and then we'll get into the charts, but we need to keep up. A lot of these pumps are happening because we're about to get slaughtered here soon. Whether it's by the mid to end of this month or the start of next month when they do another 50 to 75 basis points, we're about to go into Wreck City. So pay very close attention.
The Fed decision is out. So let's take it over now to Yahoo Finance's Brian Chung for the latest. Brian.
Well, the Federal Reserve has officially raised interest rates by 0.5%. That largely expected, but the Fed also unveiling details on how it's going to go about its Fed balance sheet roll-off program. The Fed saying that it's going to allow up to $95 billion a month in assets to roll off of its balance sheet by September. That's going to be phased.
So guys, when this happens, goodbye money dipping into crypto by the Fed. I mean, this all comes out of the risk assets that they're putting into and, you know, fluffing things up. The cakewalk ends.
And the caps are actually going to be about $47.5 billion from the months of June through August. Now, I want to read you some bits from the Fed press release. Again, the expectations were for the Fed to raise by a half point in this meeting, but the Fed adding a number of risks that it's attentive to as it starts to raise interest rates. The first, obviously, the Russian invasion of Ukraine. The Federal Reserve continuing to describe that situation as possibly adding, quote, additional upward pressure.
Excuses by our federal government. Russia has nothing to do with our inflation problems. If you want to put it on the books, you can blame them for 2% of the 100%. That's it. This is all bullshit when they bring this up. It's annoying.
On inflation, but the Fed adding a bit in the statement compared to their last statement in March by noting that China is now likely to exacerbate supply chain disruptions. Obviously, that because of the COVID-related shutdowns with the zero COVID policy in the world's second largest economy. The Fed also adding a sentence noting that, quote, the committee is highly attentive to inflation risk. Now, as far as the economic assessment, the Federal Reserve noting that overall economic activity edged down in the first quarter, that validated by the negative GDP print for the first quarter that came in last week. You'll recall that was a surprise. But the Fed saying that household spending and business fixed investment remains strong. So all of this kind of underscoring how the Fed still fixated on inflation. But again, the big news today, Fed raising by half a percentage point today and the balance sheet roll off to begin on June 1st, guys.
Yeah, and Brian, the big question here is what you were just saying when it comes to inflation, exactly what Fed Chair Jay Powell is going to be seeing. We know that he will probably, of course, field some questions on that. But from the conversations that you're having down there, from what you have been following, I guess, what is largely expected in terms of how rapidly we could potentially see inflation de-escalate, I guess, a bit?
Yeah, Sean, I mean, that remains the big question. Everyone obsessed with the details on Fed policy, but we have to remember what is the ultimate goal of all of this, which is to try to tamp down inflation. We are seeing prices increase at a yearly rate that we haven't seen since the early 1980s. Now, of course, the Federal Reserve would like to see that number go down, but there's a number of factors at play here. First of all, there's a lag impact of monetary policy. We only got our first interest rate hike from the central bank in March. Now, the Federal Reserve having this more aggressive move. Again, we haven't seen the Fed move by increments larger, at least in the upwards direction of 25 basis points since May of 2000. That might not bleed through to inflationary pressures until perhaps later in this year or maybe even the beginning of next year. Now, the Fed is hoping that there are a number of supply chain issues that will alleviate, which could give them a little bit of help in bringing inflation down. Namely, for example, any sort of positive developments that could come from Russia and Ukraine if there were to be some sort of de-escalation of issues there. We know that Ukraine is the breadbasket of the world, and then also China, if it is indeed the case that the COVID shutdowns there are also part of the inflationary pressure story. If there is an alleviation of that pressure, maybe that also bleeds through. Now, when it comes to a number, we might expect to see Jay Powell in the press conference again in about 27 minutes add some color, but we have to remember that we're not going to get a set of actual projections from the Fed and saying, here's where we project inflation, at least on PCE, to go until the Fed's next meeting. That's going to be in June, so we'll have to wait until then, guys.
Good morning, 8:29 a.m. Eastern Standard Time. I'm XRP Future Millionaire, and what we're paying attention to this morning, at least I am, I'm looking to see if the US dollar currency index, if this breaks this area, now that we had a 50 basis point rate hike, I would expect some kind of move here and let this finish off, unless it's going to pull back down through here. But this 102.91 is that overwhelming resistance support line, which I put on there when we were way down here at what, 95, 93, way down. So this is what I anticipate. If we can continue to hold this, ride the 20-day up, I anticipate a little move up here to $106.29. If that were to happen, in the immediate short term, crypto would crash. We got the 50 basis point rate hike. I mean, we got a gift yesterday, basically, because Jerome Powell said he's not going to start taking out the added funds that they keep throwing into like the stock market and crypto. They said starting, what was it, June 1st, they're going to start taking out all that money. So that's why he got this little momentary pump yesterday, because he didn't say he was going to start today and take it out, or tomorrow when it was yesterday. So it's a dangerous time, though. We got a 50 basis point rate hike. It was the first time since 2000. So it's been 22 years since we had a 50 basis point hike. Next month it'll be the same. Like I said, now it's going to be the domino effect. The cat's out of the bag. Now it'll be 50 this month. It could be 75 or 50 next month. They're going to continue to talk about if they should go to 75, because it's not going to be enough. But this is just the start of the fall. So enjoy what you've seen. Embrace, a little bit of green, because once this ends, it's going to be ugly, and investors are going to react to this. No, a lot of people were expecting them to say, "Oh, we'll just do 25," but the only thing that I seen that they allowed to have a pump was because they said they're not going to start to take all the added money, basically the stimmy for the markets. They're not going to start to take all of that out until, what was it, June 1st. But it's going to be a hard release, so June 1st is going to be a bad day in the market, likely. But all this stuff that's happening is also bad for the market. Right now, we're trying to hold this support. We pop back up. As long as we can hold this, and look how perfectly it lines up now. With 62.754, we popped up. We were using that as resistance. Now we're trying to use it as support for the first time. And the 20-day and the 4-hour time frame is coming up here. As long as we're on top of that red line, we're bullish today. The moment we drop below that line in the 4-hourly, or that red line, the uptrending red line as well, they're all in the same spot, it's bearish. So that's what we're watching this morning. In the 30-minute, we have, in the immediate short term, come below the 20-day and 30-minute. But in the longer time period, it's in a bullish position. And this, it's in a bearish position. Well, there's a bull flag that looks like it could play out. Yesterday, I said I've been waiting for us to come up here to see how we react. I've been saying it actually for the past couple days as we were consolidating sideways. And we came up and finally hit 65.78. We got rejected by it immediately. Now we're coming back up, and if we get rejected by the 20-day, that's when you would see the 4-hour time frame start to come through the 20-day. So this is a very big moment here for XRP. We need to have some volume. If it doesn't, we're coming up towards the trend lines, and you could have a rejection. But if we come up, our next move is going to be what I talked about yesterday. We're going to come up to that. So we finish this, and if we can break out of this, we'll end up coming up to the 68 cents. So if we get rejected by that, we'll come back down to 57 or 56.5. So that's what we're looking at with XRP. That's as easy as I can put it for everybody. And Bitcoin did the exact same thing. So Bitcoin looks exactly the same as XRP. It really does. If you look at it in the 4-hourly, it's trying to come down. It might have a bullish divergence starting the 4-hourly. So now we're likely going to have a little test down here to see if it can support it. And if it does, this will allow us to back test. First here to 40,800. I feel like a broken record. We talked about this yesterday. So, and then the top end potential would be probably up here. So that's what we're looking at this morning. Stay blessed, everybody.